So now the next topic is when to invest and trade in small caps and mid caps. Now this is very interesting because we've understood why to get into small caps and mid caps. Now we get to the next point, when. Now this is very critical. So let us first go into the ideal world. Now before we go into the world, we have to understand what sort of a being we are. So I'll keep it very simple, you are either a fundamental guy or a technical guy. Now, what is the ideal world for a fundamental investor? So we've heard this, you want to buy when there is blood on the street, you want to be greedy when everyone is fearful, etc. Right? Very easily said. Let us see what happens. So what do you want to do ideally? Say over the last 15 years, 2008 happens, there is a Lehman crisis, the Bear Stearns falls and you want to get in. Now, if you go back to the chronology in 2008, you would have gotten here at around 10,000 Sensex when the first collapse of a financial institution started. And over the next few weeks, the market fell by 20%, right? But this is the point of time you want to come in. You just want to keep sitting on your cash all through 2008, start to the bottom, and you want to be here. Now you've put your money and then you sleep again. Now, when do you want to come back again? You want to come back again when there is again another crisis. So you want to come back in 2011 when there is this whole global crisis. We started calling pigs how Portugal, Iceland, Greece, etc., Spain are in trouble. The global markets are in trouble. US markets are in trouble. There's a crisis going on. So you want to come in 2011. And the Nifty has fallen from 6,000 to 4,500. Again, you've invested and now you're sleeping with your portfolio. Now, when is the next time you want to come in? You want to come in August 2013. So basically, you're just sleeping, hibernating and waiting for the worst things to happen in the world. And then you say, I'll come and buy. So in August 2013, USD INR goes to $68. The first Fed taper tantrum starts in 2013 and the markets fall. The BSE small cap index has fallen 45-50%. And you want to come in and invest, right? Do you think it will be easy to invest in those times? 2008, there is absolute disbelief in the whole financial world. And moment you start buying, the index falls another 20%. The stock you buy falls another 40%. Do you think it's easy? Same way in 2011, there is a global market crisis. You bought in 2011 because the world was in a crisis. But by the time you're in 2013, the small cap indexes again made a new low. Do you think that those two periods would be easy once you've invested in 2011? Okay, consider it easy. Then you come to 2013 and the markets have only fallen 20-25% from the top. And you're hearing all sort of negative news. All right, you got it right again. Then 3 years pass away, the markets are okay, there is Brexit around the world, etc. Then you want to come in 2016, the markets have corrected good 20-25%. There is a rumor of long-term capital gains tax in India. Global markets are falling and you want to come in. All right, again you get in 2016. The Nifty has fallen from 9,000 to 7,000. You get in. Then you again wait for a period of time. In between there was demonetization, but the Nifty had only fallen 10%. So do you think you hear about demonetization and you would be able to buy 10-15% lower itself saying this is the bottom? Not really. But between 2016 to 2018, you have a solid bull run and you could not get any correction in the interim. All right, you are just going to buy when there is panic and you will get a lot of returns. Then you wait for the next 4 years from 2016 sitting on to cash and then COVID comes out of nowhere and the markets fall 40%. But the markets fall 40%, but the first hint of the news comes and they've fallen 20%. So you'll be buying say 12,400 becomes 10,000, you start buying, it goes to 7,500 in the next couple of weeks or less than that much time, in less than 10 days. So moment you start buying, you see another 20%. But great, you are a long-term investor and then you've bought. Now what happens for the next 2 years? Again, you have to wait. Now this seems an ideal scenario, but do you think you can go through all these cycles as a fundamental investor, only waiting for the worst things and expecting yourself to act rationally? In March 20, the markets have fallen. Do you think you will be able to act rationally? The markets have fallen 20-40%. Would you be worrying about groceries, medical supplies, taking care of yourself, or would you be buying one way, right? Do you think in 2008 when there is a whole financial crisis, consider you are also in a crisis, you are working in a company and you've got laid off. Do you think you'll have the capital to invest? Same way in 2013 when everything is corrected 50% over the last 2 years. Will you be able to act and be able to deploy a large amount of capital? But when we look into hindsight, it looks pretty easy. You just need to wait for the next crisis and come in. Say from 2020, we are in 2022. There has been no major crisis. There was Russia-Ukraine crisis, but how much had the markets fallen? They had fallen 15-20%. How do you know whether it will fall 40% or stop at 20%? Then there would be another crisis. There were two waves of COVID where the markets corrected. But do you really think in a 10% correction you will be able to act? The ideal world, it is very easy to say, I'll buy when there is blood on the street. But how much blood, how much accidents do you want? It's very tough to take a gauge of it. But in an ideal world, in a hindsight way, you could say 2020 was so simple. You could have just bought all these stocks so cheap. The same way people who invested back in 2008 also thought the same. But in 2007, would you have sold so much to have capital? The funny part is, whenever the crisis comes, you want to put money, but you don't have money. That is the reality. But in the ideal world, what do you want to do? In the last 15 years, there were 5 opportunities to buy and you would want to go all in, right? But it doesn't work out well because when the bottoms come, it is easier said, but difficult to do it. Now, consider it, what basically happens is, the real money is made when there is liquidity coming back. So you would have bought in 2020, the real amount of money, when you say returns came in mid of 2020 to 2021, right? So you can keep planting seeds, making your portfolio, but the returns are made when there is liquidity again. So when there is rain, good environment, the plants grow into trees. Now consider this, you're a technical guy and you just want to buy all-time highs. Now, there was a bull market in 1992. Then nothing happened for the next 13 years. Could you be waiting for the next 13 years for the Nifty to cross back, the Sensex to cross back 1992 highs? Oh yes. And anyways, there were no returns to be made. Great. So you came in 1999, 2000, made some money, then the markets fell again. So the Sensex was 4,500. You came in at 4,500, saw 6,000, sold on the way down at 5,000. Great. Then for the next 3 years, the markets did not cross that 6,000 point and there was no trigger of a new 52-week, new all-time high rather. Now you come back in 2005, the market makes a new high, you get in at 6,000, 7,000, Sensex, see 21,000, sell it on the way down at 18,000 to 16,000. Then what happens? You get into a period of 6 years where the Nifty, the Sensex does not cross the same high. Can you wait for those 6 years? Yes, because there were no returns to be made. I'll only buy at all-time highs. So you come back again at 6,400 Nifty. Moment you enter, post that over the next 1 year, the Nifty goes from 6,400 to 9,000. You are extremely smart. On the way down, you sell it at 8,200. Then again, for the next few years, the market does not go anywhere. Then there is LTCG rumor, there is demonetization, etc. Then you again come back in 2017, the Nifty crosses 9,000, goes to 11, 12,000. You ride on to the move and get down on the way at 11,000 in COVID. And then you do nothing for the next year and a half, wait for it to again cross that 12,400. You come in at 12,400. It goes to 18,000. You sell it on the way down at 17,000 and again wait. And now again we cross about 18,400, 600. You are coming back again, right? And you hope to have a good ride again. Now look at this case also. If you look at it theoretically, yes, every time you got in, you made money. And you made a good 10 to 25% in that period of time in the index itself. But there were really long periods of zero exercise to be done. So you bought in 2005, sold in 2008, and you just hibernated for the next 6 years, right? But if you look at it as an ideal case scenario, what would you have done? Fixed income for 6 years, make 25% returns, run away, go back to fixed income, right? But does that really work for you as an individual? Easier said than done. So the ideal world for a fundamental guy is buy the worst. The ideal world for a technical guy is buy the best periods and then run away. But what we've realized is it's very easily said on a backdated chart, but when we come to the reality, it's very, very difficult. To give you an example, in 2014, the markets make a new all-time high, but there are a lot of things happening around. You have Indian elections which are coming up. Global markets have multiple reasons. So at that point of time, would you be able to buy it at 6,400, 6,500, 6,800 Nifty? Then in 2017, you've got demonetization and started rallying away. Will you be able to buy 20, 30% higher, right? So what we've seen right now is the ideal world, buying fear, buying momentum and getting out at the right time. So it's not easy. right? But it looks easy when you look at it as if I would show this with various points, I would have put a chart of demonetization and said buy now. I would have put a chart of COVID, buy now. A chart of 2008 global financial crisis, buy now. It would look easy. But when you come to the real world, it is not that easy. It is actually extremely difficult. So what we try to do next is try to go into the real world, try to look at actionable ways to find out when to buy small caps and mid caps.